Hey there, friends and followers. In this week's video, we are going to be breaking down the current home price growth, as well as taking a look and trying to gain some insight as to how we got to where we are in today's real estate market. Hang out for the next couple of minutes to grab hold of that information. So yes, as always, welcome back. So for those keeping an eye on the real estate market, it's no surprise that it's been nothing short of astounding what we've seen taking place. Home prices have continuously increased year over year since roughly the early 2010s, and upon closing out 2021, the median home price index was at a record 18% year-over-year growth rate. To give you some context, in a normal balanced market, homes roughly only appreciate between 4 or 5% annually. Recognizing the trend is one thing, but understanding the factors that brought us to this point is also crucial, especially if you are contemplating venturing out into the housing market for one reason or another. A recent article published by Home.com featured some insight that touched base on the top 5 contributing factors, which I'm going to share with you guys now. Now, first on the list for contributing factors is historically low mortgage rates resulting from the pandemic. Now, in an effort to keep consumers spending and avoiding possible recessions during the pandemic, the Federal Reserve lowered the mortgage and interest rates to record lows to allow prospective homebuyers to get the most value for their money by spending less on interest and more on the actual home itself. A $350,000 home may have made for some hefty monthly mortgage payments with interest rates in the 4s, but when lowered into the 2s or 3s, it allowed a lot more buyers to step into the marketplace, and that's exactly what a surplus of home buyers did, thus contributing to the demand of things. Next contributing factor is low supply of houses to choose from. Now, we all know the relationship between supply and demand. When supply isn't there, naturally demand increases. Home prices are no exclusion to this rule of thumb. As demand increased due to super affordable mortgage products, the overall housing supply hit all-time lows throughout 2021. And construction of new homes wasn't a saving grace by any means either. In fact, according to the Census Bureau and HUD, there has been a significant underbuilding of homes following the market crash of 2008 and leading up to present day. With an inventory shortage already existing, the pandemic sought to agitate that issue further due to various production shutdowns and supply issues for different materials. Third contributing factor being the surge of millennial buyers. Now, as the current largest generation in America, millennials made up 43% of buyers in last year's market and have been the largest percentage of home buyers since 2014. About 81% of younger millennials aged 25 to 31 and 48% of older millennials were first-time buyers as well. Of those percentage of numbers, nearly 2/3 were married couples, and also many of which were two-income households, often giving these buyers an edge in affording higher housing prices, as well as bidding wars that followed upon offer submissions. Contributing item number 4 is inflationary actions by the Federal Reserve. Otherwise known as printing money, it's estimated that the Fed began printing $120 billion of U.S. currency per month and increased money supply from March 2020 to February 2021 in an effort to keep the economy on track and people spending during the COVID-19 pandemic. However, when there's more money in the marketplace, the dollar loses its value, thus necessitating more money needed to purchase gas, groceries, and of course homes, thus creating inflation. And while higher home prices mean that they are more valuable, the flip side to that is that they somewhat reflect the weakened value of the US dollar. And last contributing factor is inflated costs for home building. Now, if you followed some of the headlines, I'm sure you've seen where builders have incorporated price hikes on their construction homes, and in some cases priced out buyers that they've had under contract. Due to both labor and material shortages as well as rising costs, home builders are ultimately having to spend more money to build these homes. And let's face it, because these individuals are in the business of making money, a lot of these costs get passed down onto the home buyer. What's unfortunate is that while the cost of building a home is increasing, the production output is not, thus translating into more expensive homes. In conclusion, yes, there are some challenges you should expect to face if you are in the market looking to buy, but it is not impossible. And for those fortunate buyers that are able to ink a contract and get to the closing table, price growth works beautifully in their favor in the form of home equity. Well, there you have it, friends. Like it or dislike it, those are some of the contributing factors to our current residential real estate market. Now, I would definitely love to hear what you guys think on this matter, so please drop a comment below. I would enjoy seeing any input from any of you out there. Be sure, as always, slide on over to the page, give it a like and subscribe to stay up to date with great real estate market news like this, as well as everything OCALA, Marion County. Thanks for tuning in, checking out the videos, and we'll catch you guys on the next.